Hey everybody, Smart Silver Stacker here. Apologize if you hear me sniffling a little bit in this video. I seem to be having a bit of an allergy attack. Not really sure what accounts for it. Something in the air, I guess. Or maybe it's just that I have become allergic to BS and all of these mainstream media headlines and Fed minutes that I have been reading are finally getting to me. But it was certainly an interesting finish to the first week of trading here in 2023. And on Thursday, we had the jobs report come out that was better than expected. We added a lot of service sector jobs, a lot of leisure and hospitality jobs. We did lose manufacturing and natural resource production jobs, but nevertheless, this was interpreted as good news for the economy. And as a result, in this strange, twisty world of economics that we are experiencing at the moment, the markets all sold off in a very big way. All the major stock indexes, gold and silver, everything took a big hit on Thursday. But then on Friday, that all reversed. We got a nice recovery in the price of the metals. Gold finished up around 1870. Silver gained back most of its losses from Thursday. And all of the markets were surging as well. Now, in my video on Thursday, I did point out that the rally that we had in the dollar that day would likely be short-lived, but I didn't realize just how short-lived it would be. I mean, it didn't even hold up for one day. And the reason why we got this reversal in markets, it's so indicative of the situation that we find ourselves in these days with these markets. And, we'll get into that reason why, because I think it is an indication of how the remainder of 2023 will be playing out as we move forward. But I have a question for everyone. Have you checked out Silver Botanicals yet? They've been a channel sponsor for several months now, and if you haven't, you're missing out. Their specialty is products powered by nano silver particles that harness silver's unique properties. And you can check them out with a link down in the description. And don't forget to save 10% on your order with coupon code STACKER. Now, why did markets have this stunning rally on Friday? Well, annual wage growth in December was 4.6. That was the number that we got. This was lower than expected, and it represented a decline in wage growth from previous months. And to use the term wage growth is even a little bit disingenuous, I believe, considering that inflation remains north of 7%. So real wages are actually falling quite significantly, as even if the CPI accurately measured price inflation, that would be a pretty big pay cut for American workers. But of course, inflation is actually much worse than what is reflected in the CPI, due to all the finessing of the data that they do. So in reality, U.S. wages are just getting decimated here, and markets seem to love it. More jobs on Thursday, markets tank, but oh wait, wages are plummeting. Now markets are soaring. And this is the bizarro world dynamic that the Fed has created with all of their meddling in the economy. And fundamentals, they're completely out the window at this point. Bad economic news is great news for these markets because all that matters anymore is the Federal Reserve. And what else would you expect? The Fed inflated this massive asset bubble. The air is starting to come out. So now investors are desperate for the Fed to come back in and start printing. And any slight hint that that might be on the horizon, it causes cash to flood into these markets. Now, right now, at the time I'm recording this video, markets are pricing in a 25 basis point rate hike from the Fed in February. And if we take a look at the CME FedWatch tool, you can see that a 75% chance of that happening is what the tool is indicating. So investors are expecting a continued slowdown in the pace of rate hikes from the Fed, and we may see that. But if you read the Fed notes from December's FOMC meeting, it becomes clear that the Fed is claiming that they are going to persist with tighter policy until inflation is closer to their goal of 2%. Now, will we hit that? I don't think so. I don't think that these rate hikes are going to have that much of an impact on inflation before something breaks. But the thing that's clear here is that the Fed is going to continue to tighten until something breaks. I am convinced of that. But more easing is also coming. The Fed is simply going to wait until everyone is begging for them to ease. Politicians, the public, the media, finally, once everybody wants them to, and everybody says there's no other option, that's when they're going to come to the rescue. It's the problem, reaction, solution dynamic. And when that happens, inflation will likely soar and the dollar will plummet. But don't just take it from me. This is what Michael Burry, famed hedge fund manager from The Big Short, had to say on Twitter recently. Inflation peaked, but it is not the last peak of this cycle. We are likely to see the CPI lower, possibly negative in the second half of 2023, and the US in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard. And by the way, if you are on Twitter, follow me at Stack Smarter. That's a good way to engage in conversation with me. And silver and gold, look at their price action yesterday. Some bad economic news, a faint hope of future Fed intervention, and gold hits 1870. So what do you think that the metals are going to do when the Fed actually begins to print money again? Now, this isn't financial advice. I'm not a financial advisor, but in my view, gold and silver are going to be heading much higher. So that's why I'm continuing to move into hard assets to protect my wealth. I buy my silver from SD Bullion, my preferred precious metals dealer. If you're looking for a good place to start when shopping for metals, check them out with the link down in the description. And at today's prices, gold and especially silver remain ridiculously undervalued. Even after the recent rallies from the September lows, they are still very cheap, particularly when you compare them to other asset classes. Just look at Tesla. The stock is down 70% from its peak, but it still trades at a PE ratio of 36, a very rich valuation. And this is just indicative of how big the asset bubble that was created by the Fed's easy monetary policies really is. Markets have fallen quite a bit, but there is still a lot more air that can come out of this bubble. And precious metals remain one of the few undervalued assets around, and in my opinion, none more so than silver. And as far as solutions to these problems, like falling real wages, well, more Fed intervention is ultimately likely just to make these problems far worse. You may have seen this meme going around, and I think the message now in 2023 is more relevant than ever. Here's an updated version of this meme for today. It says, in 1964, the minimum wage was 5 silver quarters. In 2023, the melt value of 5 silver quarters is $21.55. We don't need minimum wages, we need to fix the money. And the Fed returning to stimulus, creating countless digital dollars from nothing, is quite the opposite of fixing the money, but that is likely where we are headed. Now, let me know what you think in the comments down below. Thank you very much for watching, everyone. Stay safe and happy stacking. Smart Silver Stacker, out.